All right. I'm going to do a little test here, make sure I got sound today. I apologize about yesterday's video. I tried to do an update and did not have sound. So I apologize about that. I'm right. I'm going to do a little test here, make sure I got sound today. All right. So it looks like the sound is definitely working. All right. So there we go. I'm gonna kind of get started here. Again, I do apologize about yesterday's video. Um, for anybody who has heard me mentioned, I know I was shouted out by Darren Moore, King Solomon, and a few other people about my TA. So I just been running a video journal here. It's not price calls. I'm not giving any forecasts. It's not what this is about. It's not what I'm about. But I am trying to teach people how to read some of these charts from a different perspective that may help you with managing your portfolio. So if you're not a trader, that's totally fine. I'm not encouraging you to become a trader if you're not one. But everyone likes to at least have some feeling that they know how the health of the market is at any given time. Are we in an uptrend? Are we in a downtrend? Are we going lower? Are we going to the moon? Even if you're not trading, right, you're always kind of at least wondering like where the market is headed, right? So rather than have to rely on a lot of other people's interpretation of what they see in the charts or what they may see in the fundamentals, I have created this methodology that I use, right? It's a form of trend trading, so it's nothing that I'm trying to per se take credit for of inventing or anything like that. But it does become a dumbed down version to allow any person to be able to kind of look at a chart and understand what trend you're actually in, right? And where you should be at, whether you're on the buy side, whether you've taken some off the table. And so I'll kind of go through that quickly. There are a lot of historical videos here that kind of go back in time with this information. Today, I'm just kind of going to update it. And I wanted anybody who's new to be familiar with my process, follow along, judge it by the accuracy. And I think if you boil this down to just the math, the things we can ascertain definitively, this should help you out because it has certainly helped me out for years. And it's something that can be provable based on the data. And then you can turn around and use the data how it best works for you. So if you find yourself using a different EMA than the one that I choose to use, or you use it in conjunction with other things, like all of that's good. But I do want to give a baseline to this information so that people have something and they're armed with so that they can be more efficient in investing in this market. So that's essentially what the goal is here. I know that there are a lot of people out there that says, that these things can't be determined via chart. And so one of the things I'm absolutely trying to do is prove those people wrong, because as you will see over time, there's actually a readable way to discern these things, and it can be proven, as I have done historically from the time that I've started this, that I'll continue to do going forward, and then you can judge for yourself. So welcome anybody that came in. I'm going to go kind of back to the basics just for real fast before I get into the actuals of this update. But again, I always encourage people to always look at a weekly chart, particularly if you're new to this information or even primarily, right? Because this is where you're going to do your best trading, at least from my perspective. And then we'll get into why the daily charts may become important, or certainly why the monthly charts can become useful. But I do not encourage you to ever trade off of anything under the daily chart unless you're just so experienced that you're going to do some of this stuff on your own and outside of the parameters of what I'm kind of showing here. Not that the method doesn't work in those lower time frames, and I can cover that if I have time today. But for performance reasons and understanding reasons, I want to kind of stay in this realm of in a weekly chart or above, right? And so just to kind of cover it, everything around my thesis revolves around the 19 exponential moving average. So that's why I label these videos hashtag 19. That's why you hear me talk about 19 all the time, because my thesis is around this 19. The 19 in all my videos will be this yellow line. And essentially, to make this real simple before I go into some of the details, it's as easy as this. Anytime price is in an ascending pattern, right, and it breaks above the weekly 19, you want to be on the buy side, right? So you're if you've taken some off the market, or if you're considering whether you need to be in the market, you absolutely need to be in the market anytime price is above the weekly 19 exponential moving average. So your entry point would have been here at about 41.78, right? We went as high as 55 cents on that run. We've kind of cooled off a little bit, right? And we're currently at this 48. But the important thing is that was your absolute entry point. Now, we had other people who were taking the daily entry points, trying to get an early exit, and I'll cover that a little bit. But the most important thing is knowing that doesn't matter what the asset is, right? Whether it's a security, whether it's a crypto, whether it's anything, if you're using this method, the important thing to know is you want to be entered whenever it crosses the 19 exponential moving average. Now, the also important thing to know about that is you're going to be setting a limit order essentially at the same price, so that anytime price loses that 19 exponential moving average, right, you're right back out, and this becomes your pivot. So a lot of people get scared to trade for some reason, right? They're like, I don't want to miss out on if price goes up, and why should I be, selling here at these? And we're early, as a lot of these narratives I hear. But right now we're sitting at a bottom, so it's easy to say, well, why should I be selling right here, right? Because we're probably not going much lower than this, and none of us know. So the important thing is, if you're much higher and you're up here in the 70s or dollars above, the fall can absolutely be 70-80% of your portfolio once it breaks out of the 19, and you don't want to have to experience that unnecessary loss. Some are comfortable because they call them unrealized losses, so they're like, as long as I don't sell, I don't lose. No, you're absolutely losing, because if it was a 70% drop and you had sold higher, right, you missed out on the opportunity to grow your bags by 70%. So growing your bags is the most important thing about investing, right? Because you're trying to always accumulate more of the asset. That is an important thesis that people need to understand about investing. Investing is about accumulating more of the asset, not buying a certain percentage of the asset and then holding it until it eventually appreciates to some point, right? That's one way to do this, but I advise you that's a very inefficient way to do this. You want to be accumulating the asset over time. So the best way to accumulate the asset over time is what we call dollar cost average. So you're literally buying. So if you're buying every 2 weeks, and this is the weekly chart, you had a 1, 2, you had a buy week. 1, 2, you had a buy week. 1, 2, you had a buy week. And you're dollar cost averaging into the asset so that your bags are always continuously growing. Another way is to be cognitive of how to make these trades, right? And then, as I said, you're out anytime price breaks the 19 exponential moving average. So you had an obvious exit here back in April because you lost the 19, right? And so if we put this on a ruler, your exit netted you a potential 60% more of whatever you had taken off the table, which is very significant, because this is what's going to grow your bags over time. It's going to make you very successful at this investment, rather than simply holding and waiting for some number that may or may not come, at least any significant time that may be important to you. Right. So these moves are the very important moves that we're using this method to catch, so that we actually grow our bags and we don't have these unnecessary losses. So we see how the trend turned on a loss. We see here we're back kind of turning the trend on an upside. So we wanted to make sure that we had these entries. Now, the next important thing about trading this method, right, is understanding the crosses. So here we had one of the rare times where we don't get a whole lot out of a break to the upside on a weekly chart. So we had a break, 1 week of kind of up and downward movement that ended down and then broke back down, and we profited, right? So you want to execute discipline to say, I'm entering here, right, and exiting there no matter what. And there was an exit here because we can see the wick, but nonetheless, the rules stay the same because you're setting yourself up for this move, which is important. These don't happen a lot, right? These are what kind of fake outs where you don't get a big move above the 19 after you break out, because this is where we're always targeting, moves above the 19. But what would help you understand the strength of the move and what to expect out of the move is looking at these other moving averages. So our next moving average, we see the 3 crossed over the 19. This is what gave us the strength to get above the 19, right? What we next notice is our blue line, which is our next lowest EMA. Here it's the 11. Never crossed, right? It kind of went up as we were making this move off and failed, right? So we knew that this wasn't going to be a strong move to the upside, even though it was breaking the 19, because in order to get that ultimate move that you want from a break of the 19, you want the crosses. So you need white and blue. We got white quickly fell back down. You knew this was going to be downside. You knew 9 was still continuing down. So this is telling you the trend of the direction of the market. It's important to have these EMAs up so you can see for yourself what the market is actually doing. We had an attempt of a recovery here, and we see some of the breaks of price, right? So price kind of quickly broke above the 19 here, but look where your 3 is at, right? Hadn't even crossed through these other moving averages that were acting as resistance at the time. So this wasn't a strong pass. We see they had an attempt here at a pass, right? Still same conditions. And by these wicks, you can see, right, your 3 is basically here at the time that it's making that. Your 3 is basically here at the time. So these weren't strong breaks, and we can tell that by these other exponential moving averages indicating the strength of the move, right? We can clearly see your downtrend when you're breaking here, right? And your downtrend with your moving average. You had the actual 11 cross that gave you all this strength to continue down. So these 3 and 11s are telling a story, and even though I don't trade off of them, they're important to visualize the strength of the move. So if we're looking at XRP today and where we're probably going into the future, right? The most important thing we're looking for now is this 11 to eventually cross over this 19. We'll get our double cross. That'll give us momentum to take on this, right? 1 through all these sets of exponential moving averages that are our actual resistance. Once we get past there, right, we're kind of in this area that I call blue skies or clear skies, where we have less resistance and we can start potentially setting new higher highs, or potentially even challenging an all-time high, right? But that can't happen until you get into a blue sky region. We see the resistance, and we see the cross needed to even get more momentum at this point. Now, the interesting thing is, since we made this move, we've seen it use this EMA as our resistance point right now. So it's what's holding down price. We've seen price go back and look for support. And what happened? We got support right on our 19. Now, it was a little wick under it. So by rule, if you took that out, you were quickly back in. And today you're sitting here comfortably, right? So the important thing here is you don't exit the market until price leaves under here. So whatever happens at this point, we're just riding it to the sunset, hoping that this yellow line will get drug out. And if we do have to take an exit somewhere, the exit was just a lot higher than our entry. And that's essentially how this works, right? So we're looking for this 11 cross. In order to get that, we're going to have to continue some upward movement to the upside, obviously, but this is what we're waiting for. I'm going to go here to the daily just real quick and show, because I have showed this in previous videos. There are people who are going to look for these early entries on the daily, and that's fine. The only rule that I want to remind people is that if you're taking the daily entries, anytime price breaks back below the 19, you have to exit back out, right? So you're going to turn this essentially into your pivot instead of the weekly, right? And everything else pretty much stays the same. So if you had this early entry here on the daily at 34, you got a lot better entry, right? And you were doing that because you were getting the cross and price, the double cross that you were looking for, and you had that signal that this was going to be a good move, and it was. You had one trade here, price broke down below your daily, so you had to go out. You were quickly back in, and that end turned into all this gains that you're experiencing today with 2 taps on your 19 testing support. So you never had to exit from your last entry here, and you're comfortably sitting today above your 3. So again, these other moving averages are not things that you're necessarily trading off of, but they're help telling the story. So me knowing that this price is sitting here above this most weakest support on this chart tells me that we're kind of in a positive momentum, right? Because if we were in a negative momentum, it would be under this 3, and we would be thinking about testing the 11, right? And same thing there until we tested the 19. And if we broke, you'd be out. But your profit at this point kind of is, or your benefit here is, you entered here, and even if you were to exit by rule, your exit is here. So you've already kind of put yourself into a great position of profit, even though your actual portfolio today is up here at 37, 38%, right? Even if you took a fall from where we're at and you ended up exiting here, you still gained 26%, right, on the move. And you could potentially gain more if this thing drops and test these supports, because you're already taking some off the table by the rule. So no matter where it goes from there, you're profiting if it goes down in any numbers, and you're prepared to go back in at the same place, so that if it gets strength, bam, you're profiting on both sides. So you minimize your risk only by your ability. Your only risk in my methodology is your ability to catch these actual price ranges in real time when you're doing this trade. So you have to be able to set your limit orders and your trigger orders in order to know where these prices are at and quickly hit them. But sometimes price can just bounce and then immediately bounce up. So like if it comes here and triggers your out because it loses here, right, and goes right to here and then bounces, right, your trigger order has got to be set from the time that your sale went through so that you're back in at this point as it goes back up. And that's the risk factor in this method, right? It's not the ability to tell what direction or trend you're in and where you should be. That is 100% proven by the data. And you can look at this over time, anytime, in any asset and prove this. It's unfailing. But your ability to catch these moves are going to be your performance. So you have to know how to set your limit orders, set your trigger orders on time. And this is another reason why weekly charts are a lot better to trade off of, because you have a lot more time, generally speaking, to make these trades when you get down to lower charts, 4 hours, 1 hour, the volatility can move so fast that you may miss it. Now you may enter, let's say for instance, your entry point was at 43.67 and you just couldn't catch it. Well, you may have caught it at 43.96, right? Not much off, but that could be a small loss, right? If you just were trying to net your trade and actually stay at zero. I try to net my trade so that I'm never losing on any trade. But if you do have these small fractions of miss on your entries and exits, they're generally made up for by knowing that you're making these type of profits when you make your move, right? But try your best to get a net trade in this area so that you're entering and exit at the same point. And no matter how many times you have to trade, you're never losing on any trade. And it's just as simple as that. So yeah, right now we see we're battling with this support. That's what we're going to keep a look on. We're looking here at the daily chart. We do want to look at any potential crosses. So we see we kind of have one cross here that may help us out, contain some momentum to the upside. If we zoom in a little more, looks like we have a potential cross here that's kind of confirming. So the longer we stay above that 3 EMA and on the upside of price, it'll further confirm these crosses. And we'll continue some of this movement to the upside. So right now, things are looking great. And the only thing that you will really want to be concerned with at this point is if price ever loses this daily. If you're using the daily, if not, as I showed on the weekly, you'll be paying attention to the weekly. And as we all know, we have a lot of strength against the weekly. So a lot of the XRP traders should be very confident that they're in a good position right now. We're not sweating anything unless for some reason we lose this 42. Whatever that is, 42.20, right? So it's all good. We're also looking for that cross. This thing can continue movement to the upside, and that's what we're looking for. So I'll quickly go over to Bitcoin, because again, you may think that this is exclusive to one particular asset. An important thing is, and I've proven over time, doesn't matter what asset it is, whether it's the dollar, whether it's gold, whether it's security, it will all read perfectly off of the 19. So we see our trend turn here when price broke the 19. This was the easiest way for you to gain more Bitcoin, while everybody else is telling you, no, just hodl, 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 hodl. And you had experienced this great big loss, right? Whether it's an unrealized loss or loss, you didn't grow your Bitcoin by essentially, conservatively, we'll take that down. I can't see over there. We know 56%. So you could have grew your Bitcoin by 56%, which is the same thing as your Bitcoin today going up 50%, 56%. The difference is, and this is why this is important, if you're buying Bitcoin here and it goes up 56%, in order for you to spend off of any of that and take advantage of the appreciation that you made off your Bitcoin, you have to spend some of your Bitcoin, right? And so again, you're kind of like, making some, but you're having to get rid of the asset that made it for you. The important thing about these moves is you're actually accumulating more Bitcoin. So as you accumulate this Bitcoin and you do start to see these higher prices, right now you have potentially twice as much Bitcoin, depending on how many of these moves you caught, to sell off at these higher prices and not have to deplete your bags, right? So it's important to catch these moves, but right now I'm just showing you how accurate and how consistent it is about these trend turns off of the 19. So if we go back in time here, this trend kind of turned back here When it broke above the 19, we see exactly what it did. Not one time did it go under. So not one time did you have a sell signal. You didn't have a sell signal to here, and you would have been appreciative of getting out because you went down here, right? And so you gained more Bitcoin. You had your break back up, not just price, but both crosses. And we see what happened. Went on and set a new all-time high. Your price never lost it upon this break. Well, it did. So you had the break here. You had a few tests here, right? Until it went on to new all-time high. You had your break down here. You made a whole lot more Bitcoin on that move. You had this one little fake out where I tell you normally makes big moves past the 19. This was the rare time you had a 1-2 week right back into failure. But we knew that was coming because the EMAs didn't cross. All these other ones, you had your double cross, right? So doesn't matter the asset. You can see how readable it is. It also finds your supports very accurately. So a lot of people are wondering where the bottom is for Bitcoin. They're pulling up all this stuff, all these people talking about their different stuff. I don't have to change my numbers on my EMAs. I leave the same ones on every chart. And guess what? It accurately found your bottom, at least for now, right? Without me having to do any guesswork and knowing where these things are going to go at. And I kind of knew that it was going to be this particular one simply because in the crash that we had of 2020, right, it used this same one as its support. So we the same support that became the bottom here is the same support that is becoming our bottom here. And we've seen some tests below it, but ultimately this is providing our support. So if for any reason Bitcoin was to lose this support, I'd be taking some off the table, obviously, right? But then I would know to potentially be buying in this range, because I don't suspect that Bitcoin will ever break past here, right? Unless something really drastic happens. And then guess what? I have my next lowest support here, and I wouldn't anticipate any break below this. But again, if so, I would be taking some out under that, right? And doesn't matter what happens below that. I would have just made a whole lot more Bitcoin as we continue to fall down. So I don't care whether the price goes down or not. That doesn't matter to me, because price going down just means I make more of the asset. Where a lot of the world is screaming and crying, we're talking about dark days and cold winters, I'm always profiting as price goes down. It's an important distinction, right? And so we'll also look at this quickly and see what we're looking from a cross perspective. Kind of have one happening here that's keeping price down, confirming out. So we definitely don't want to continue that. You definitely don't want to see this 11 cross over here, or Bitcoin could end up losing its support. So we have a window that this downtrend is definitely kind of still in effect, because none of this is pointing in an upward direction. You have potential crosses. So Bitcoin is not looking good, but this is your support that you can kind of react off of if we are going to go down. And obviously, we know where the buy points are that we're looking for to confirm an actual uptrend, which for Bitcoin right now on our weekly chart, which is the most important one, would be about 23. Well, we'll just confirm it at 24. So about 24,000, you'd be back above the 19, looking good. Right now, it's not. And so you want to see this 3 cross 9 or 11. You want to see 3 cross 19. You want to see 11 cross 19. And that will give you your strength. Right now, Bitcoin has no strength. So it is what it is. And I show how easy it is to read this by using these EMAs and the method that I kind of developed. So it's ascertainable by anyone. You can copy basically the same numbers that I have, on my algorithm for my EMAs. And you can look at this any time of the day and know, man, I need to be pretty much all in if this price breaks here. If it doesn't and it keeps rejecting this 11, then I know I'm the downside. I can continue to accumulate at these low prices. Am I going to lose any of these buys here? You'll know by looking on the monthly chart, because it'll lose the support. So it's all the information you need to protect your buys now, and your future buys are here, and they're visible via these EMAs. So I'll quickly kind of go to ETH just to show you how consistent this is with any asset, with your downtrends, right? Your breakouts, your downtrends, your attempts, right? And we're in a downtrend for ETH as well. So again, you can use literally any asset. A lot of times in my older videos, I'll go to something like gold or the stock market or whatever, but I guess I'll quickly just look at it here. Gold, has a long history. So on your weekly charts, you do see a lot of noise, and you'll see this for other assets that have this longer history. In order to get rid of that noise, you don't have to change your algorithm any. The numbers stay the same. It's the important thing about this is the numbers, but you just go to higher time frame. So when you go to your higher time frames, you can see your double cross, your break of the 19, gold went on this run, used this support, finally broke down and goes in your downtrend. So again, it works for literally any asset, doesn't matter. I don't want to make this video very long, but one of the things that I am tracking at the moment right now is the XRP to Bitcoin chart, right? So when I went back to XRP and I did wrong chart, sorry. I think this is it. Nope, that's the market cap, which is another important chart that I'm tracking. So I'll quickly cover this. But we see here, this is a long monthly chart, right? And so this is XRP against the market, right? And what percentage of the market are you? How are you doing kind of against the market? Oh, this can't be a market chart because we're not, this is the market cap. So dominance is under that. Let's go to the Bitcoin chart. Booyah. So bam, not only you're always battling against the price of the dollar, right? Other pairs are important too, and Bitcoin is a strong asset against the dollar. So anytime you're gaining against the dollar and Bitcoin, it's an additional sign of strength. So I wanted to show you this Bitcoin chart because XRP right now is very strong against Bitcoin. Like we lost a lot of our strength to Bitcoin way back in 2019. We went on this horrible downtrend that took us way down here. Now this red candle is obviously the lawsuit, right? And so we experienced all of this, but during the lawsuit, we got back in the high dollars, right? During these moments where we got above the 19 against Bitcoin, right? And again, over here where we got above the 19 against Bitcoin. And we got in these dollar ranges on these breaks, right? Broke back down, and that's what got us down here, right? But importantly, what I've been tracking ever since we broke back down is, you know, the potential for a break back up. And so we got it, right? And I was prepared for this. So we got our break back above the 19, right? Went up here and actually tested this next EMA, and we're kind of using this support. But we got the cross, and right now, more importantly, we're really running up on this 11 crossing over this 19 as well. So if we get this and we continue this move against Bitcoin, looks like we're going to have another press up that can try to work us through these EMAs here. We got 1, 2, and 3, right? Until we get in this breakout area, and that little thing just popped up, and that's our last populated EMA before we get to like what I call the blue skies area. So right now we have a potential to get up, you know, above this area, which is around 3,000 satoshis, and potentially even break this last one at about 3,500 satoshis. So that would be a very strong move for XRP to get in these ranges against Bitcoin. And we have the strength in the charts to show it. We got the cross, and we're trying to get the second cross. We noticed that we never got the cross on any of these other breaks, even though we got as high as almost $2, right, back in these time periods. But the white line never crossed, and the blue never threatened. We had that same impulse here. What got above the 19, white line never crossed, blue line stayed still. So even here, when we had this little move before the lawsuit, right, and XRP was trying to get strength, and it gained way up here in the 4,000 satoshis, we still had the white line, didn't even cross the 11. The 11 stayed still, even though price broke above the 19. So we know that wasn't really sustainable without the crosses, right? So this move that we have now, to me, is stronger, because not only are we above the 19, only at a lower level, obviously, right? But this time we have the actual cross. Now it's only the first cross because it's the white line. So we're kind of intensely watching for this cross as is, you know, as we're sitting at a beginning of a month, right? Or are we at the end of a month? Yeah, we're at the beginning of a month. This is October, right? So we kind of have the next 30 days to see if we're going to kind of get this cross. So this may not be something that happens quickly, but it'd be important to watch it and confirm it at the end of the month, obviously. But if we get it during the month, it's still just as important. So XRP is actually showing strength that can absolutely continue, and that's what I'm watching. And I want everybody to be able to read these charts and have some definitive information about the direction of the market, rather than a lot of other people who may be covering this TA but have a lot of non-judgment calls, right? Could do this, could do that. I don't know this and I don't know that. I'm trying to give you some actual information that will indicate this, and you can verify for yourself. And again, all you have to do is copy the numbers that are there in my EMAs, right? Exponential moving averages, not simple moving averages, is an important distinction, right? So I think I've kind of covered everything that I want to cover. Update this video. If you do have any questions about your own particular asset, and you say, well, yeah, it works with a lot of those, but what about, I'm a Cardano fan. Well, same thing can be found in relationship to Cardano. And I think an interesting thing that I might just quickly run through here is all these end up with very similar patterns, right? And so you can kind of see that all of them are kind of in the same pattern, and you can tell the strength of these assets by just comparing where they're at in that particular pattern, right? So if we go to ADA on a weekly chart, right, it's sitting under your 3, under your 9, not threatening your 19, right? We go to Solano, and I'll quickly run through some of these. You'll see the various similarities in pattern, right? Battling your 3, under your 11, under your 19, there was your drop off, right? We'll go to BNB. BNB is a little stronger. You had your drop off trend, you had your attempt at reversal, right? We're sitting here. If I zoom in, it's at least above the 3, challenging the 11, challenge the 19 and reject it. So that's where it's sitting right now. We'll go to XDC. XDC is a little stronger. It got above the 3 and the 11. It's testing the 19 right now. So a good break. And a move for XDC looks like it's potentially coming up, right? So that's one that you may keep on the radar. It looks like it's building up for a potential break of an important weekly break of the 19. Of course, you want to confirm that with your 3, the white line cross, and your 11, the blue line cross. But it's one to keep on your radar, as we can see, at least by the chart. Algo, see what we got going on there. Algo is a little stronger too. It tested the 19, rejected off. It's kind of going into a squeeze play right now because it's using that 3 as support and this 11 as support. So it's blocked in this range. Either it's going to fall below these and give it up, or it's going to break above and you get a move on Algo. You also want to see the 3 cross over, so you'll be looking for that. But Algo is definitely showing a little strength, but we can see all these patterns are generally the same, right? Your 19, all your moving averages you would have to get through as you work back up in price. Quickly go to H-bar. Same pattern, showing much more weakness under the 3, under the 11, under the 19. Your obvious breakdown that you lost the 19 there. You didn't threaten it at any point in time to get back in. So this was an easy short and or get out, right? Without fail. Been great and easy to read for anybody who was in H-bar at the time. I will quickly just go to Quant because I have been talking about Quant on my Twitter and on these previous ones because it was easy to identify its recovery. And it's still sitting very strong. So we had a recovery here, and then I did identify the early recovery with the daily as well. But even if we just look here on the weekly, right, we had the entry, you had your cross, went up, never got your 11 cross, right? So we can see how this failed this exponential moving average, right? Because we didn't have this cross to push it through there, right? So and it dropped back down. It did eventually recover. Your 3 never crossed back over, so we knew that wasn't going to be a big move to the downside. And then we got what we have been waiting for, is the 11 to cross along with it. Once we got both of the EMAs above, then we went on to tackle the next EMA, which we're doing at this particular moment. So now this is the last EMA before Quant gets into its kind of blue sky region. It is showing probably the most strength in all the market right now from a charting perspective on your weekly chart. So Quant could really take off. Let's kind of see if we take a look at this right quick. Sometimes I have to remove these candles because it does get in the way of looking at the crosses. And we see we're getting potential cross here that may help accelerate some move to this last EMA. The next cross we'll only have, I guess, is when this 11 starts to make this cross as well, which does have some time to go. So Quant may be taking a cool off before it breaks here. We'll need to confirm this a little further and get this 11 over here, and then bam, this thing could really take off. So your quant people, you're in a great position right now. Hold your positions. Don't get scared out just because you're making some good gains. Use the chart as a rule. You won't exit until it loses the 19. And today that would be at 104. Again, like I said, I did identify this early entry for a lot of people in quant when it broke the daily and not just the weekly. We were kind of looking at this for a while. So your early entry, and it's still ascertained by the 19 without changing any numbers, right, was way back here when you were coming off this bottom. So we had it, lost it, got it, and we went on our way, right? Had one brief moment where we went under it, quickly recovered within the same day or the next day, went on to do this, and your identifiable downtrend was easily seen here by a break under the 19, came down here. Your recovery is just as identifiable with a little attempt here, a little attempt here, your last breakout, and you went on your way. Now, again, we kind of confirmed the strength of these moves above the 19, right? Because we can look for the crosses. And we see here, we stayed above. We didn't get any crosses. We got both crosses there. We got both crosses there. So again, it's easily to identify which direction these trends are going in and how easy it is to manage your portfolio when you have the proper information. People who sit around and tell you that none of this stuff can be looked at and determined because you don't know the future are just absolutely not knowing how to look at a chart and what indicators to look at. Because I can prove with real data that these trends are absolutely able to be forecasted and used as a method of managing portfolio management to an absolute degree. So I appreciate anybody who caught this information. Dang, I did have some people looking in and I didn't catch them, so I apologize. I get so big into looking at the charts that I don't look back at my other screen to see if somebody has joined. So I do apologize. You can hit me up on Twitter if you do have any questions. Um, but yeah, I'm gonna go ahead and kind of keep this a little short. Get ready to kind of end it out. Looks like they might still be here. One watching. Let's see. It says device not connected, so I don't think that they're here. And they kick from studio, man. Or maybe they lost connection. Maybe you're going through a bad area or something. But yeah, welcome aboard. And I hope you like the information. Um, Yep. So I'm gonna go ahead and cut it here. Y'all know the directions, the indicators, how well it can be ascertained. Share the information with others so that we can make the XRP community and the crypto community, at least from people who are in our circle, more successful in managing these portfolios and on their way to having better lives as a result. Thank everybody who participated, man. Shout out, and I'll see y'all down the road. Again, if you have any questions, hit me up over on Twitter, same old Caster. And I'll do my best. Doesn't matter which asset, you can ask me any one, and we'll try to make sure that you get the best information in regards to whatever you're looking at. Because I kind of don't trade a lot of these other assets all the time, especially smaller ones. There's just not enough liquidity for me to be messing with. But I'll certainly pull it up on the chart if we need to be looked at. So thank everybody and have a great day.